Hello everyone, welcome to Elliottwave.com YouTube channel. Today is October the 3rd and today's chart of the day is gold, 60 minutes time frame here. Now you can see right here that we are currently doing this wave 3 in the minute degree, and within the wave 3 we can already see a 5-wave subdivision, which is should be looking to complete pretty soon. Now this doesn't mean this is bullish and then we should buy it, no. But you see the arrow is turning down, meaning we actually expect more downside for now still. Once we finish with this wave 3, we should be getting a bearish rally, right? And again, you are dealing with the wave 3. It can always extend as much as it wants. But the idea here is that as long as we stay below 1947, which is the beginning of this wave 3, we should continue to see more downside, okay? So that's the whole idea of this chart here. Not necessarily we have to rally now and we have to rally to 1865, for example. That's not the main point. Now usually when you do finally get a wave 4, usually that should be around 23.638.2% retracement of the wave 3. But now since we don't even know where wave 3 is going to stop or end, we don't know where the wave 4 is still. Now assuming wave 3 stops here, just assumption that we should be looking for something like 1846, 1865 to finish this wave 4. So ideally you should see a clear bearish rally into this somewhere around this area before it goes down again. Now if we zoom out on the daily time frame, now we can see that, let me copy this, 2 and 1 over here. This is your 2, this is your 1. So you're looking for 5 waves down starting from September the 1st. 1, 2 should be looking to finish 3 soon. And you notice that we, from this peak, we got this lower low, right? We can need to make a lower low and a lower high. And if you use this one as your sort of what we call connector, right, from the peak, then you can measure the extension to give you an idea of a possible target to the downside. Now the possible target is from 1683 to 1800, right? So it's a range. It's never going to be one specific level. And ideally then, I think this decline that started from May 4th, all right, should continue to see more downside until it hits somewhere between 1683, 1800. Then from here we have a chance to get a pretty decent reaction, minimum to correct this cycle, and if it is bullish then actually it can go to new high from here, okay? But this is the range, and you notice here, depending how you want to look at it, let's see, if you look at this over here, right, this one, it seems to me, is better counted as a 3 swing, right, instead of 1, 2, 3, 4, 5. I think this one is better counted as an A, B, C. Now if that interpretation is correct, that this is actually a 3 waves, then that is actually saying that despite the sell-off and the weakness in gold, since the first leg is a 3 swing, this is still considered to be a corrective structure. So once this entire weakness is complete, we can actually have a chance to start a big rally, because again it's a corrective structure down, not an impulsive move down, right? But anyway, but that's kind of like long term. Short term, then we know that we have more downside left in gold. Minimum 1800. It can go lower than that. It can go to 1700 because it's all the way down to 1683, right? So shorter cycle, then basically we like it lower, and any rally that we see should fail and continue to go down. All right, so that's the idea here with gold. As always, if you want to get more updates on gold or any other commodities, forex, indices, feel free to check our service. We have 14 days trial and the link is in the description of the video. See you all again next time and have a nice day, everyone.